Let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. We got a lot to get into today, KG. We've got, some of the market momentum. We've got the latest on trade and President Trump's Asia tour. Let's start out there with the latest there. We're gearing up for that meeting with Xi Jinping coming off of this South Korea trip. What's at stake here and what's the latest?
Yeah, well, you are actually seeing the president actually signaling that he is open to reducing the fentanyl tariffs if a deal is going to be done. And so that is actually providing a little bit of optimism when it comes to the market just in general. And then that also could open up the fact that NVIDIA could potentially ship some advanced chips to China. Now, obviously, those are being rumors at this point in time, but the market is obviously going to perceive that to be a welcoming sign that maybe we are going to see an ease in tensions. There's also a report, and this was kind of the rumor last week when you're looking at the grain markets, that China did purchase some soybeans over the last couple of days. Now, it wasn't a substantial amount, but obviously, once again, it's a signal to the market that potentially something will be announced here in the next 24 hours or so. And that could be a very strong catalyst for the market moving higher here, especially if we're able to see those tariffs getting reduced or even removed. I'm not sure if we're going to see them removed, but potentially reduced here. So that is obviously setting us up for a pretty decent market, just to say the least, especially for those companies that have been impacted significantly, especially those that actually manufacture in China and ship over here to the United States. They could see a really decent bull catalyst if we are able to see an adjustment when it comes to those tariffs. So a very high bar. We are also expecting to hear a trade deal with South Korea today as well. Not sure the specifics of that, but we have seen Howard Lutnick actually speak over the last, I'd say, hour and a half or so, speaking about the fact that he's trying to push a lot of these countries to be importing a lot of energy and being energy independent, if you will. And that could also lead to maybe some of these energy stocks catching a bid today if a deal is announced, whether it's LNG imports or other energy matters, if it's oil or what have you. So very interesting setup for today, especially given the Fed meeting that we're going to have later on in today's session.
Okay, so let's get into that Fed meeting. We're waiting for the Fed decision. You've pointed out before it's not just about the path from here because the markets are essentially pricing in a cut from here. You say we need to pay attention to QT. Are we looking out for dovish signals on that front?
Yeah, that would actually be the market mover today. Obviously, we are expecting at least a 25 basis point rate cut for Fed funds. But if we actually do see a stopping in quantitative tightening, basically meaning that the Fed stops rolling off assets on their balance sheet. Right now, they're rolling off around $5 billion in treasuries. That's a very small mark, but it could actually have an impact when you're looking at mortgage-backed securities, which they're rolling off around $30 billion a month at this point in time. And if they actually do stop that policy, one, it does signal that they are ready to take action in the event that we do see an economic slowdown or any type of cracks in the credit market for that matter. But that also could push mortgage rates to the downside as well. That could actually give a boost to not only financial stocks, but also the housing market. So I think that's actually the big headline that everybody's going to be focusing on. I've been kind of anticipating that they're going to stop quantitative tightening for the last couple of meetings, and they haven't done so. And they've been able to kind of get away with it. But now, given the fact that we have a lack of economic data, potentially some cracks when it comes to the labor market, and let's say that inflation for the most part has been sticky, they are probably going to try to leverage this as a signal to the market that they are prepared to maybe cut rates aggressively in 2026, as well as be prepared once again for any type of financial shocks that we might see over the next 3 to 6 months.
Okay, all right. We got a lot of earnings to get into. Let's get into a couple of them. We've got Boeing out with its latest quarterly results. The stock is a little bit higher, off by just shy of 1% right now. Why don't we dive into what some of your takeaways are here?
Yeah, I would say it's a mixed report, to say the least here. We actually see revenue coming in at $23.27 billion. Street was looking for $21.97 billion, and the adjusted earnings per share came in at a loss of $7.47. That's more than what the Street expected at $4.59 as a loss. But that is because they did actually take a charge on their 777X product offering here. They took a $4.9 billion charge, and that's because of certification issues as well as delay issues, delivery issues when it comes to Boeing here. They're still having some issues when it comes to 737, but obviously we have seen the FAA kind of lifting some of the restrictions when it comes to the production cap, so that should be a tailwind for them in the long term, and they are delivering a significant amount of planes given the headwinds that they are seeing right now. Now, they do have a labor dispute when it comes to some of their defense employees, and so they're trying to figure that whole route out, but the company actually did turn cash flow positive for the quarter, and that's the first time that we actually have seen that since 2023. So it's a pretty big milestone milestone. That's why I say this is actually a pretty mixed report. We were not expecting that write down of the 777X, but seeing the company turn cash positive, I think is actually a pretty bright sign here. So a little bit of a mixed price reaction that you're seeing early on this morning, but overall I would say it's a stabilizing report for the most part.
Which is something that investors have been looking for from Boeing. So maybe it'll be dinged upon the cash open, as the indications show in the pre-market here. Let's talk Caterpillar. This is the flip side of this. Those shares moving higher in the pre-market. Let's jump into some of your thoughts on its latest results. Looks like it was a beat on the bottom line.
Yeah, well, this is probably the first company on the industrial front that we are seeing the impacts of artificial intelligence. So we have to take note of this. A lot of these industrial stocks have not really kind of priced in AI build out in their revenue and in their guidance moving forward. Caterpillar looks like they are starting to see some traction there. Adjusted earnings per share came in at $4.95. Street was looking for around $4.50, give or take. Revenue came in at $17.6 billion, beating the Street's expectations. That's around a 10% growth on a year-over-year basis. And when you're looking at their energy and transportation unit, this is where they are seeing the benefit from artificial intelligence here in the build out, not only when it comes to power generation, but also building out these data centers. They saw sales jump 17% on a year-over-year basis, climbing as high as $7.2 billion here. So that is actually turning into around 40% of their total revenue. So you are seeing their revenue kind of mix shift a little bit because of these new trends. And that's actually a promising sign, especially if you're looking at the domestic production in-house that we are kind of seeing a lot of these industrial and manufacturing companies kind of take. You can see that within the Richmond Fed outlook that we saw yesterday, the Empire State Fed as well. That survey actually coming out and stating that a lot of domestic orders, new orders for industrial goods are actually moving to the upside here. Profitability also actually increased fairly healthy here. So this is actually, once again, a stock that has been a really good signal for us to see that this CapEx spend that we're seeing from these mega cap names are starting to trickle down into the economy, starting to hit pockets of the market that should see some impacts here, but we just have not seen it. Caterpillar is actually reflecting that right now, and you are seeing the industrial stocks overall actually moving higher today.
Okay, Caterpillar, as you mentioned, higher, up more than 4.5%. Let's talk about your levels on the S&P 500. So we finished at a fresh record, but you pointed out that it's without a lot of participation. So what are you looking for to the upside and the downside today on the S&P 500?
Yeah, to the upside, 69.60. To the downside, 68.50. I would not be surprised if we try to attempt 7,000 today if we do get that QT announcement. Just be mindful, yesterday's breadth in the market was one of the worst that we have seen as far as the advance in the S&P 500 and participation in the stocks that comprise of the S&P 500. And you also saw the S&P equal weight closing at fresh lows, at least for that session, compared to the S&P 500. So you'd like to see a little bit of a rebalance here today. VIX is implying around a 1% move to the upside or downside. I think that we will probably see some fireworks here today, but QT, I think, could be that slingshot move for the S&P.
Okay, potential slingshot move coming up. Thank you, KG. That is Kevin Green, our senior markets correspondent, with what to look out for on the S&P 500 and what's the potential to move markets.